Good evening, everyone, and welcome to another ACY Securities webinar. Tonight, we've got a few different things to cover, but we'll get right into those as we go on. For those of you who might be new tonight, my name is Alistair Schultz, and I'm the Chief Market Analyst for ACY Securities. So to get things right off the bat, we're going to get started straight away. The first thing I always have to tick off is that if you don't know, there is actually a 15% deposit bonus on at the moment at ACY Securities. So if you are thinking about opening an account or you just want to get the extra bonus credits, then please feel free to jump into that deal at the moment. And of course, there is some limits and terms and conditions, but I'll leave them for the other guys to work out with you because I'm not all on that side. Now, moving forward, to give you guys a bit of an update, if you are new tonight, my name is Alistair Schultz, and I am the Chief Market Analyst for ACY Securities. But my background has been over a number of different places over many different years. So I have closer to 16 years of experience nowadays. I know it says 15 on here, but it's actually getting closer to 16 now. And I've been everywhere from trading floors in New York to investment funds here in Australia and boutique trading agencies all over the globe, as well as working in brokers in my time along the way. Now, I am a published author. I have written a book that is basically a textbook, but I am hoping to revamp that at some stage in the near future for a much brighter second edition. And of course, I do a lot of coaching as well. And I've been featured in quite a few different places. I'm on AusBiz quite regularly. I've also been in the AFR, the Sydney Morning Herald, Bloomberg, FX Street, Finance Magnets. You name it, there's quite a few places that I've actually been in. So to move things forward, again, now, if you are interested in asking questions tonight, I encourage them. I do like to get your guys' take. I like to know what's affecting you guys in your trading world, and I like to have a look at your chart. So if you want to let me know a chart that you would like to do, let me do so in the earlier part of the session so that I can sort of account for it at the end. Otherwise, I'll just go through my pre-planned material and obviously have a look at some of the charts that I might find interesting to show us tonight. Now, if you are wanting to get in contact with me, if you're doing it via YouTube, then the best thing to do is just leave a comment on there for me. I don't actually watch the live chat for YouTube, so it does make it difficult. And I've found people leaving messages, but I'm not able to actually respond to it. So if you are on that side, I apologize, but I will get to you as soon as I can. If you are in Zoom and watching this through the Zoom link, then of course you have a variety of different options. Number one is at your Zoom link bar at the very top, you'll be able to click on the chat button. Otherwise, you have a few Zoom shortcut keys. Windows, it's Alt-H, Mac, it's CMD, Shift-H, and on an iPad, it's Command-Shift-H. So in any of those, feel free to type a message in at any time. Even if you don't understand the concept or you want me to go back over something, then please let me know. Now, for tonight's session, last night we had a few different things going. We had the UK budget. This week, we're starting to get into the National People's Congress from China, and we have oil and OPEC, as well as some news coming out of the Fed and some US data to anticipate. And tomorrow is non-farm payroll as well. So, there's a lot going on at the moment. It's probably not a bad idea to get your bearings with it for tonight, though. So, we might start with that to get underway, just to give a bit of bearing on where everything is, and then move into some of these agenda items. Now, before I really get into it, I do need to let you all know this is considered to be general advice, not personal advice. And of course, no matter what asset class you are trading, regardless of whether it be a property, stocks, futures, options, commodities, CFDs, it's important that you actually understand your investment objectives, what your risk tolerances are, and understand your own level of experience. And if you think you're out of your depth of field in any of those things, then please either send me a message or get in contact with someone who will be able to give you a hand. Now, of course, the very first thing, I'm just going to get rid of this slide. The very first thing we always do when we are looking at these sort of things is have a look at our economic calendar. Now, on the economic calendar here that I've got up for tonight, I'm just going to refresh it to make sure I've got the right one, because I'm pretty sure this is a couple of days old. There we go, move it down. So tonight we do have a little bit on. The big ones for me are the OPEC meetings. I've been quite heavily involved with oil over my years, just because it is actually one of those ones that does have a fair few simple ways of trading it, just because of supply-demand quotas that go on for it. Now, in addition to that, we do have some figures coming out for unemployment figures out of Europe, which are ones to keep an eye on. I'm not so interested in the Spanish 10-year bond auction, but I am in the UK one, because we've been hearing a lot about bonds at the moment, particularly US and Australian. I'm interested in seeing just where the UK one is as a tentative sort of thought. Of course, outside of that, a bit later on, it's very, very early in the morning, about 4:05 in the morning. We have this one here from Fed Powell to talk about, obviously, factory orders as well, and unemployment claims for this week in the US are going to be ones to keep an eye on at closer to midnight. But the reason that we've got a little bit of a high focus on Powell at the moment is because of what the Fed has been saying about bonds, how they think that inflation is good, and that it says there's optimism in the market. So I am wanting to see how he handles that after we heard from the last Fed official talking on that line of things. So that's going to be something to have a look at. I'm probably not going to get up at 4 in the morning, but I'll probably record it and watch it as soon as I get up a couple of hours later. Now, moving on. There's a lot that's going on today. No matter what chart we kind of look at, S&P 500 is down. We then have the NASDAQ, which is down as well. I'll just pull that up for us to have a look at. There we go. This one has had a bit of a hit as well. We've seen the ASX not having a great day. Oh, moving them down a bit, but well, that doesn't matter. The ASX is not doing so well today either. When I can find it, up there it is. And we've also seen some of our other Euro sort of stocks not handling it, and Asian ones as well, across the full broad spectrum of days not really going exactly to plan in most of the instances. Now, some of you are probably wondering what's kind of happened, and I thought it would be a useful thing, because whenever you do see indexes all going down, mostly across the board, it does put a bit of fear in people's thoughts as to what's going on. So we've got most indexes in the red, and if they're not in the red, they've been very, very close into it, or they've been into it for at least a certain period of time today. And so effectively, this is all really dragging on from what we've seen in US Treasuries last night, and Australian Treasuries followed suit. So we had a bit of a surge. The yields started rising, and the equities themselves, whenever you get rise in yields, you have a depreciation in equities. So, I think the worst affected market has been really the tech sector. And that's been, there's been shares sliding down from China to Australia. The S&P 500 futures and the NASDAQ 100 futures are all sort of pointing down still, which is, usually a precursor to what we're likely to see in the index when it reopens. And the big ones on the day have really been Apple and Amazon. They've been the main culprit of, having some issues going on with their pricing. So they've been down a little bit as well. And it's all sort of based on where we're thinking about these bond markets and where things are sort of moving to next. Now, the Aussie bonds sort of did have a bit of a tumble. That when I say tumble, they've risen in the yield. So they're now at 1.79%. Yesterday, they were 1.75%. So it is rising quite quickly. And I think that has a lot of people on edge, whether that's a trader or an economist or, you guys at home, whatever it may be. People are a little bit concerned about that. And we're actually starting to see more and more analysts use the line, inflation is a concern. So, it's not so much that we're worried about them going up. We're worried about them going up too quickly, like I said, on sort of Tuesday. And that seems to be what's actually happening, at least in this interim moment. Now, I have spoken several times about there being, sort of spikes happening, and that because we've got such a low baseline for inflation and also for bond yields, that, when anything ticks up, it ticks up quite heavily. Because it's just so low. So that, that is one consideration to take, but there's probably a little bit more to it. Now, one of the big ones, and the reason why I'm interested in hearing what Jerome Powell says tonight, which is the Federal Reserve Chairman, just to remind you all, is because we heard from the Chicago Fed president, which is, I think his name is Evans, and he basically commented that at his last speech, that yields were really a sign of optimism in the market, which, if you have your feet on the ground and you're plugged into the market, that's not the case. And realistically, that's something to really consider and hear whether Powell backs him up, or if there is a new direction that perhaps they might be looking at now that this has gone on for another week. And so far, they've been pretty adamant that they don't want to actually start in increasing any of the stimulus packages that are sort of going on. Now, outside of that, the best sectors that we've seen, I'm just going to flip over to the one of my other platforms for us to have a look at. So here we go. We'll just give this a bit of a refresh and have a bit of a look. Now, on this platform, I do use it a fair bit. It's free to use if you are wanting to get just a general overview. There are other functions that are available in it. This is just one of my personals, but you can see already up the top, these are all the sectors for today. So energy, financial services, industrials are pretty much the only ones that stayed in the green. Everything else has been in the red, including your sort of technology stock. So, it's indicative that today has not been a great day unless you've been really in the energy side of things. And when we say energy, we're talking, electricity companies and things along those lines. Oil commodities have done okay as well. But, that's even the real estate sector's done actually not too bad. But we're seeing a pretty big shift of people moving their stocks into what you would consider to be a value stock, or something that's undervalued, I should say. Now, while we're still waiting on the OPEC announcement, there's a bit of a consensus at the moment that the increase is likely to be something around 500,000 barrels a day as a combined for the entirety of all OPEC members. So that's not a very big jump, which should help stabilize or keep prices where they are, potentially even push them up a little bit. But we've still got to also look at a couple of other things with that. So we'll come to that when we get back to it. And then obviously the US jobless claims and stuff like that as well to consider tonight. So having a bit of a look at the charts, we're going to start off with the UK scenario, because that one's been and done, and we did have a couple of good moves on it, and we were able to get a couple of pips out of that as well. So to get started, we're going to put up a euro pound chart and a pound dollar chart. And I'm just going to go through what sort of happened and where I sort of saw it. On Tuesday, I said that I had more preference for the euro pound over the pound dollar. And I posted 2 trades for you guys to sort of follow on that. And it's sort of the opposite happened. So I had my preferences being the euro pound, and the euro pound kind of went, it still played out. It just missed my targets down here by, I think, 2 pip. And I ended up sort of closing out later today. Anyway, it was at this point over here. And then on the pound dollar, we had very similar sort of stuff, but it actually sort of went the distance that it needed and closed out. So, that was a nice one to see. But considering that, this was my primary pick and then this was my secondary, it's also, not something that I implored or enjoyed happening. So, but it's nice that it got to the right sort of places anyway. Now, effectively, we had, this announcement occurring about here on this green candle that's going on the euro pound. And so in this event that we saw for the UK, setting up and leading into this, I put a number of charts out and for people to have a look at, and I basically set up, here's my stock, here's my, my barriers that I'm looking for. And I had my entry points, somewhere sort of in this sort of vicinity here for a short position on the euro pound. And then I had a long position on the pound dollar. And that's just to do with your base and quote currencies. On a strengthening pound on the euro pound will push price down on the actual chart. So it has actually moved in continuously down in that direction. You can see that sort of happening now. It happened at the time, like not long after we had sort of, the announcement made. And effectively, there's a few changes that are coming for the UK. I've spoken about it a few times already, but I've sort of highlighted points, I think, on last week coming into one of the webinars about the English economy. And I thought that, this budget was likely going to be focusing on sort of continued support for them. But I did also mention that there's probably going to be some form of a blueprint for tax reform to happen. And it's going to be a difficult circumstance for them because they've still got the economy not open. And they're trying to get that recovery to happen, but they've still got the best vaccine rollout so far. So you've got a couple of conflicting factors that sort of go back and forth and put a little bit of an and ah in the situation. That said, they have actually already started implementing policies for tax reform, though they do have a delayed start. And if I was living in the UK, I probably wouldn't want to be getting taxed like that, but in the reality of things, it's not too much different to here in Australia. So, income tax was increased to 40% from 20% starting from 2022. The VAT rates are also being extended for 6 months, so they're getting reduced tax on that side. Stamp duty relief extensions until June. And they're also offering wage support extensions, and that includes, employees that are furloughed, but they're going to start rising employer contributions from July onwards, and then they will go until September. And welfare payments were also sort of given. But, to give you guys a bit of a baseline about the UK economy, the UK economy shrank by close to 10% last year. And in all from impacts from and challenges from COVID-19. This year, the budget estimates are seeing sort of growth figures somewhere in the 4% range. And next year, they're expecting to see another increase to about 7.3%. Now, regardless of these numbers, in 5 years' time, the UK economy is still going to be lagging by 3% had the pandemic not actually occurred. So the budget's already receiving some criticisms, as you can imagine. It's always that way when it's political. It's basically a political battlefield. And, the biggest concern, I suppose, is that we're going to be seeing businesses and individuals have increased costs. And that's just the crux of it at the end of the day. And from an economic standpoint, the risk is that, it's not just domestic companies that will be affected. You'll also find that, corporates and foreign investment and, any of those sort of things could potentially put a ball and chain onto the UK economy. But, that still remains to be seen at this stage. So we can't assume that that's going to be the case. From there, in the charts, we can sort of see here, we've got the euro pound. The impact on it has not been, massive. This the range here we've got here is only 44 pip, maybe a little bit above that. And it's been sideways for quite some time on that front. But, if you were looking at the pound dollar, which I'll just flick to that chart when I can. Yep, there we go. Now, the pound dollar, we've had a little bit of a different move. Effectively, from here to here, you've got 158, but from the actual event on the day, there was, close to 70 to 85 pip sort of happening. And so, this is, looking at the pound's performance so far this year, it's actually the best performing G10 currency so far. And whilst the effects of the budget have been minimal on price, I think that and there are still a number of significant tests for jumpstarting the economy back on track. Overall, the fiscal support is quite good. The speedy delivery of the vaccine should really enable them to have a pretty rapid reopening. Even if it's just endured, basically the worst downturn. I think I read somewhere that it was, close to three centuries being the worst one. So I've still got price targets in mind for end of year, somewhere around 1.5 for the pound dollar against the US. So, there's definitely, scope for this to play out a little bit kinder. Now, if we take it down to a 15-minute chart, there are a couple of things that I'm going to try and point out for you on these, because they were, it's always good to review sort of what's gone on in the trading day a little bit. Now, first one to point out on the euro pound, leading into today, we've had this happen here. So this is what you would consider to be a resistance pattern known as a double top. And it's played out quite well. Ideally, on a setup like this, you would be wanting to run sort of a neckline at about here. Then you would be running a stop line probably about there, and then you double the distance down. So if this is now a 7 pip, then you're running 7 pip down to about here, and that's where your take profit target is going to be. Now, squashing it up a little bit further, there's been obviously a lot more action that's sort of happened. I might even just change the time frame back to that 1 hour so we can see it a little bit clearer. So, realistically, that's probably the better one of the day. Over here, you have a similar sort of shaping happening, but it's inverted and it's not what we like. And throughout that sort of whole phase, it's been not too bad. Now, whilst this isn't the better one to go with, where do we go with the plan, and why did I like the euro pound a little bit more? Good morning, Kenneth. It's good to see you as well. It's actually evening here, 7:20 in the PM in Australia. So hello to you. Thank you for the message. In this chart here that we've got with the euro pound, these lines are still in effect. So, you can treat this, as a range of 47 pip for yourself to basically play a bounce play. The lower it gets down here, think of this area as being oversold, this area as being overbought, and look for entries that will let you go up and then down and then up and then down all the way through this. Sounding a little bit like Arnold Schwarzenegger's music video from the 80s there, but that's okay. And so, if we can keep on getting that to happen and we do get another test of, you've got to wait for the test. So, wait for price to touch, come back, and then take off. And then vice versa the other way around. Naturally, if it goes outside of this and closes outside of these two areas, then we have to go, okay, well, we're broken out. We've now got a different plan of action, and we have to consider what we're going to be doing then. In my thoughts, I'm more likely in my own head thinking that this is probably going to break out on the long side. And there's a couple of reasons for that, but the main one is that there is such a contrasting difference between the EU at the moment and the UK when it comes to vaccine deliveries and getting back on track. The ECB is still considering further stimulus via bond purchases at the moment. We don't have that happening in the UK. They're wanting to already start to recoup some of those costs from putting out massive amounts of stimulus and wage subsidies and furloughs. So, whilst they're extending it now, they've already announced that we're going to be recouping this via increased taxation. In one instances, that taxation is literally double what UK citizens are actually used to having to pay. So that in turn means that we've got more for the long side on the pound than we do on the short side. So when we look at the euro pound position, or at least, sorry, I should say that because we're dealing with euro pound and it's a back to front quote currencies and all that sort of thing, I should say short side. So we're looking here for pound strength to really happen, in which case, we're looking for pushes down this way, not this way, but on the pound dollar, we're looking for them to be up on this side. Now, looking at the pound dollar, we have a slightly different scenario. It has ended up being not a bad place for us to be sort of trading in. I'm just trying to find the right chart here. So just to mark out for you as well, the same sort of thing on these patterns, double top pattern right there, neckline at this bottom of the box. You could put certainly put a stop loss up here, measure to there. So there's your 160 odd pip, move it down. There's your 160 odd pip, just about there, even a little bit further if you had, let it run to about the 200, but obviously, 4-hour chart, a little bit different. Now on the hourly, same sort of deal. Now, this is where we saw, in this area where we saw these sort of price actions sort of changing. I believe it was in around here. I would have to go back and have a look exactly on my chart to work out where it was. I might actually have one that I've screenshotted here somewhere. Let's see. Yeah. So, okay. Now, when we saw our moves, I'm getting sort of slightly different look, but it's basically about here that we had it happen. So between here and here, there's your 70 pip that we're talking about. And obviously the big wick candles here are where the action sort of was happening. Since the release of that's come out, we've seen it sort of pushing down. Now, the reason that we've seen prices pushing down on the pound dollar or the sterling has been because we've actually seen an increase in the value of the dollar index. So the US dollar has appreciated by about 0.3% off the top of my head, which is giving us a little bit of a backwards alley to work with. Now, even then, there's been a lot to sort of take in on this last couple of days. You have a little bit of a triple top pattern here, not perfect, but and certainly, it does play out, but I don't think it'd be one that I would have taken. And of course, you have the same sort of thing here, an inverted backwards double bottom, not one they want to see. The reason being, this is lower than this side. So where can we think about our next lots of trades? And what am I thinking for the pound? Now, like I said before, I'm thinking that from the standpoint, if we were to focus just on the GBP, not the US dollar or the euro, it is the best performing currency at the moment across the G10 peers. They have had a rapid expansion of vaccines and getting them out and getting people vaccinated. They've got declining hospitals stays and everything of the sort. So that's all beneficial and it's all good for the currency. Now, even then, we're still going to be seeing some lag when it comes to the 5-year plan, but let's worry about that in a couple of years' time, not immediately now. And so, realistically, I'm still thinking, for the pound dollar at least, a long position would seem suitable. Right now, this is probably the one to be sitting on and holding on to. The only downside is that we have this happening right now, where we have, price breaking the most recent swing low. But with the long wicks on the top side, it is quite positive to sort of look at it from a price action perspective that, there is scope for it to sort of push higher. And, going on a daily sort of chart, we are most certainly in an uptrend. So if we can stay in the trend, then, the trend is your friend. And of course, drawing a line of best fit or any kind that you want to sort of go with, you can run one like that. And basically, you're either looking for a bounce off here for a long position, which this would be a pretty good spot because you've got, support here. You've got, your upgoing trend behind you. You then have the capability of, if price does fall through, there's another place of support, which gives a second opportunity if you decided to bail out of the first one. Naturally, I would not encourage, if you bought here, to buy again here. That's not how I would suggest it. But if you bought here and then it went up, then I'd suggest, that's okay. Pyramiding's fine, but I hate scaling in. So, in doing that, we've already had touches down the bottom before. You've got another one here that fits in. And on the top side, price does come and respect this line as well. A couple of times it's done it here just before. It's done it here before, here and here. So you've got more than 2 points of contact to form the trend line. You've got 3 to confirm that it's actually in effect. And in that instance, we actually do have some sort of nice placements for these lines to sort of fit for us. So, realistically, I'm aiming for a sort of, price to go from here back up this way over here like so. Now, if that doesn't happen, that doesn't happen. But I am prepared to basically take a long entry from about this point. I'll just mark that up for us so you guys can sort of have a look and draw them up if you decide to put them on your own charts. And so effectively, once price breaks this red candle and closes above this line, then I'd be happy to take a long position, run a stop loss back here at the 1.38 mark. And then I'm going to be trying to go for about 200 points. And so naturally, the bigger the trading size or the chart and the bigger the reward factor, usually the less risk I'll apply to that position. So, please bear that in mind. Now, I have gas bagged a lot about the pound on the UK and all those sort of things. So we are going to try and move on to some of the other sort of areas for you guys to sort of think about. Now, I do have some pictures. Oh, no, I don't actually. I thought I did, but I don't, that were going to be useful. Now, the next one that we can look at tonight that is going to be probably kind of handy for you guys to sort of think about. And this is an Aussie dollar position. We've also got the Aussie yuan, but I don't trade that a lot. I'm happy to look at it for you, but I sort of think of this more from an Australian dollar perspective, just in my head. But effectively, now the next part of the agenda, so to speak, is the National People's Congress annual meeting. Obviously, being an annual meeting, it's only once a year. It starts tomorrow. Generally, this will last about 2 weeks. Sometimes it's less than that, 10 to 14 days roughly on average. And in these meetings, you have Xi Jinping down there, the president, and of course, a variety of Chinese officials, and they focus on looking at new policies and sort of announcing them to the world, as well as changes in who is doing the leadership side of stuff. So these are important events, and considering Australia's ties to China plus a variety of the world's dependence, these sort of meetings do make a difference. So last year, the focus was on national security and on Hong Kong. This year, my feelings are the economy is going to be the big one. The recovery is going to be something else, national and local budgets, but also technology ambitions are going to be a pretty key part for people to be playing with. Now, the way I see it, I actually see a few different targets for them to be targeting. And I know this is probably a little bit more fundamental. It's not so much related to the chart, but we'll come back to that side of things. Now, last year, when it comes to gross domestic product, they didn't provide a target. They decided to waive it because of all the stuff going on with coronavirus. They always generally give a 5-year growth plan. And on that 5-year growth plan, the estimate is 5.5 to 6.5% growth as GDP each year. So if they don't give a growth target, then it would be safe to assume they're aiming for about 5.5% this year, perhaps a fraction below. In terms of what we're looking for to see how they're going to be doing that, we want to see them reducing the total debt growth that they have. So they have been massively taking on lots and lots of debt this year. The way that they do that, one, they taper stimulus so that they rope that back in, all the stimulus checks they've been giving out or the government support that they've been giving for businesses and things get wound down. And that's how they sort of reduce that debt side of things. Obviously, we're going to be looking for their economic goals for 2021 and 2025. The two areas I think they're going to be looking at focusing on, and I'll bring up my this chart here again. The two areas I think they're going to be focusing on, one, technology. The other week, I made a bit of a video about this on the chip manufacturers who are making very small chips like NVIDIA and Intel and all those, and Samsung and the Taiwan semiconductor company. So semiconductor chips is what we're sort of talking about here. And because of all the sort of blacklistings that have gone on recently with companies sort of related to China and dependent on the US, China has been dependent on their semiconductor chips from the American market. And so, they're going to be having difficulty getting some of those semiconductors out. And they've now sort of, I think what we will likely see, they've already sort of alluded to the idea of perhaps grooming some of the Chinese domestic semiconductor companies into very big tech companies. So expect to see, if you are investing in Chinese markets, to see a bit of growth in the tech side over the next 5 years, but also in the sciences side of things as well. The other sector is healthcare. China has a massive aging population. Naturally, that means you're going to need to have nursing homes and aged care facilities and a variety of different measures, probably hospitals increasing. They have all of that sort of stuff is going to be needed. So that means their healthcare sector and more predominantly the aged care sector is likely going to be seeing a bit of attention at this meeting. Outside of that, financial systems. We saw what they did with Ant Group not that long ago, where Ant Group became probably a little bit more big for its own boots, and they chopped that right down. So they're going to be trying to do as much reform on that. We've already seen them implement some changes to the Hong Kong Stock Exchange, and there's likely more to come. So I am keeping an eye on that. Outside of that, the usual suspects are there. Defense spending and Hong Kong, like we saw last year, national security, all those sort of things, and energy sectors. How are they planning to sort of, when I say energy, I mean sort of more on the greenhouse side of things. How are they planning to sort of reduce their greenhouse emissions, and what way will they be going about it? So they're the main things I think that we're likely to see out of that scenario. And in terms of sort of thinking about this, it's a 2-week event. So it is quite difficult to frame, what we might be thinking about today when it starts tomorrow and what changes might be made by the next 2 weeks. So, bear in mind, if they are going to be focusing on that front, expect to see Australia in this puzzle somehow, particularly because of the need for commodities. I would anticipate seeing a bit of a boost on some of the rare earth metals that we do offer. China does mine their own rare earth metals, but Australia does have a lot as well. So from a currency perspective for the Australian dollar, I would be looking for an increase in value to be sort of happening on the Aussie side, or a strengthening of the Aussie, provided we don't see the US market continuing on its same sort of path. Now, looking a little bit closer at the Aussie dollar, something that I did notice a little bit earlier today and took advantage of very, very quickly on my phone at lunchtime was this pattern here. Now, this here is, what you would consider to be a triple top. You put your entry on the bottom side here, your stop loss is at the top, very much like a double top or a head and shoulders pattern. That's what you're looking for. And we sort of run it down, measure it down for the sort of distance. So in this instance, you sort of 25 pip. Down this side, you're looking for 25 pip, but you get a little bit more. I only took it for the 25. I just did a 1-to-1. And then I sort of let it go. So that's from sort of, early, no, that was from yesterday afternoon. I apologize. But so, that is where we're sort of looking right now. Looking at this part of the puzzle is where I'm sort of focusing on, though. We had that option yesterday. It's a bit of a counter trend trade for a short position, but opportunity seeking behavior sort of fits in. Now, this here is what I'm looking at. Ideally, what am I looking for? Okay, next steps. I want to see price come back this way. I want to see another peak made. And then I want to see it try and break that barrier. And then I wanted to see it shoot up this way. Now, this would be your head and shoulders sort of pattern. So this very technical sort of style pattern. It does fit in with our current sort of uptrend if you sort of draw it from that sort of angle. So you could use that as a support line, but it wouldn't be the most readily available one. Of course, you could also go across that way and wait for the next opportunity that comes in. I'm, quite long on the Aussie dollar, regardless of what happens at the meeting coming up next week. Yields are rising, rates are rising, value of the dollar is rising. We have the US dollar devaluing. It's all rather good for a long position in this day. It might not be good for the currency or the country and economy in general, because we do, like to have we don't like our currency getting above 80 sort of mark. So this is where the cap is. This 80 cent mark, you can see as soon as 80 cent hit, we actually had intervention coming from central banks or jawboning starting to happen. And so realistically, next time it gets up there, I would anticipate seeing some sort of a pushback down again. And this is kind of my limit. This line, that's my limit for the time being. Anytime we get to about 80 cents versus the US dollar, our central bank likes to talk it down. And sometimes if they can't talk it down, they will stimulate it down. Via bond purchases or anything in between. And we know that last week the bond purchases that happened here were coming from the yield. So they doubled the bond purchases to do that damage on purpose, because we're trying to balance and make and stabilize the bond yield market, or the yields on bonds for the bond market. Sorry, that was tongue-tied for me. So, that's where I'm sort of sitting. The other line that I'm sort of liking at the moment is the one on the support side, which is just here. And this one here, it's okay, but it doesn't really fit I prefer that. We've had several touches on this point. Naturally, it's just a line. Don't forget that. They are just lines. But we're still, 300 points or more away from that sort of scenario, or 135, I should say. And that's still something. I'm still on this sort of movement coming again for a retest of that 80 cents. We haven't been at 80 cents for a while, so getting back up there, it's touched it once. Price will try and test it again. And from those fundamental side of things, it's sort of pretty bullish. We've got a lot of tailwind behind us at the moment. It's not until we start seeing some sort of changes happening that might impact on the stimulus side or the taxation side that we'll probably not run into a problem for the time being. So now, next one. I will try and do this one quickly. I know you guys are tired. It's Thursday night, all those sort of things. Now, this is WTI oil. I am just going to kill off some of these lines that we had from the other week. It might just be easy to do that. There we go. Now, oil is an interesting one, to say the least. I follow oil a lot, as you guys already know. And I have been steering clear of not every position that presents itself. You've got a double top pattern appearing here. You've got a bit of a crown pattern happening here. You've got what you could consider to be a inverted, not imperfect head and shoulders sort of happening. Double bottom. You've got double top here as well. And so, when we look at, sort of this going up this way, it stands out from a technical perspective. You look at this and you go, well, that's an uptrend. But this is the part that we're getting up to. This is starting to get a little bit volatile. You can see just how quick the jumps up and down are. in the last couple of days. And this is indicative of us getting very, very close to an OPEC meeting that is very, very important. So at this point in time, there's no clear steering on what the supply numbers are going to likely to be. Yesterday, there were talks between the Saudis and the Russians. And as I spoke about the other day, that relationship between Russia, the Saudis, and America, Russia is always the instigator that doesn't want America to be making money from selling oil or exporting it. So, as we sort of expected, as we saw last time, Russia is seeking to increase supply by more than what is, more than what is probably necessary. And that is this whole relationship thing is really the crux. We're literally basing trades off, how the Russians respond to what OPEC suggests at the meeting. Now, let's say, perfect world scenario, hypothetically, they agree to everything and they're okay with it. In that case, the first question is, will OPEC make the 500,000 barrels per day a collective increase, and will Russia stick to it? 2, how is Saudi Arabia going to phase out the 1 million barrels per day that they have voluntarily cut because people were cheating on their cuts? So there's two points here that are important. One, if it's 500,000 barrels per day, then we're probably getting to a scenario where that's already been priced in, and oil is probably to continue on the same trajectory because it's probably not enough on the demand side, the supply side to meet demand, particularly when we've had the freezing situation in the US where refineries have had to close down. Now, if they then decide, well, we also want to make our money back, and they want to remove that start producing the 1 million barrels per day because they had to cut it voluntarily, that doesn't mean they can't, uncut it now. If they will do that, and suddenly we've got, 1 million barrels coming from Saudi Arabia plus, a couple of 500,000 more coming from them all as a collective per day, then that might actually push prices down enough back below the sort of $59 mark. If this $500,000 figure that we're talking about, 500,000 barrels per day figure is above, meaning it's 500,000 barrels or more, then we are likely to see a slump in oil pricing. If it's less than expected or it meets that target, I expect it to sort of either sit roughly where it is now in this $60 to $65 range, or it to keep on going. So, this is one of those ones where you've got to play on both sides that you can sort of work with. We're basically waiting for a breakout to occur. 4-hour chart, solid uptrend. 1-hour chart, solid uptrend. The 4-hour is the same at this point in time, but we do have this head and shoulders pattern that's appeared before. So we can use this area here, the top of this head and shoulders, as a resistance point going forward. And I think we are safe to say that this is the support line. $58 a barrel is probably where price would get stuck if it was the slump. So we're working in this range. They're the main 2 lines to consider. Outside of that, there are a few extras. You've got the one across there. You've also got one here, and you've got one at this point as well. So you've got a few places of support and resistance that might be applicable to a position. If you wanted to run a Fibonacci retracement, if you're going the full technical route and run it that way, then we're currently sitting at a 61.8 line. So that's quite important from the perspective. 61.8s quite often see reversals around them. Price has already come up close to it and bounced away, and it's currently bouncing away again. So, until I sort of see evidence from OPEC and hear what OPEC actually wants to do about this situation, I am sort of sitting on my hands, keeping a close eye. The closer this gets, the more I am wanting to take a trade, but I'm also being very, very cautious about where it goes, because oil can move very, very quickly, as we all found out last year. So, at this stage, I'm, basically waiting for one of 2 things to happen, and that number means that it's going to be very quick action. When it comes out, we're going to be needing to place that trade then and now. there's not going to be any waiting around. In the meantime, and we're waiting for it today. At this point in time, this sort of drop happening now, we've seen this sort of action before here. We see it on the upside as well. So this is all kind of in the normal realm of it being a little bit volatile this week. So please bear that in mind. The meeting is in this overnight sort of session as well. The worst part is they don't give you a time they're making the announcement. It's a tentative thing. So you basically just got to tune into your oil feeds and keep an eye on what some of the stats come in. I tend to use Twitter for this because it gives me a notification directly on my phone and goes bing, and I'm good to go. So that's the general gist of where I'm sitting on oil. We've got 3 markets to work with now. So a couple more than that. We've got Euro pound, pound dollar, WTI, and obviously Aussie dollar. In terms of thinking about the ASX 200 and the NASDAQ, I'll just go through these very, very quickly because I have sort of gone over time already. Now, within my view, S&P 500, I'm quite happy for the long side of a position at the moment. I suppose a bit of that buy the dip mentality. On the NASDAQ, however, I'm not so confident because it is so heavily weighted on tech, obviously. And so I am sort of wanting to sit on my hands and see where we go next with that. Now, I have said before, good tech companies are still good. It's when you're getting, it's the pandemic winners that we all couldn't live without that we are now finding we don't actually need as much, and people are craving that social interaction to be face-to-face. That is seeing a bit of a slump. I'm still liking travel stocks at the moment as well as one of those value picks. And on cyclicals, I've been a long-term investor into banking and energy and mining sectors for well over sort of, a decade, basically. So I've always kept and maintained positions in those sort of things. So I still sit with them. I sat through them all the way through the pandemic. All I did was just buy more. So, keep that all in mind for the next time. Now, I have sort of run out of time. No one has sort of chucked out a chart throughout the thing anyway. I think you guys have enjoyed the session. So I will wrap it up. Of course, if you have questions, feel free to put them through to me. I'm not going to buy it. If you don't feel comfortable doing them in the session, then I'll give you my email address now for you to have a bit of a look at, or at least my social medias, I should say. So feel free to send me a message on any of these. Twitter is probably the best one to get a handle on me on, or on the YouTube channel. I'll always sort of check the comments and reply to them. But of course, I hope you have enjoyed it. Don't feel that you can't reach out. Now, of course, if you do want to catch out more of me, I'm on the drop most weeks, about 3 times a week at the moment. Thursday afternoons at 3 p.m. every fortnight. I'm on the trade every Monday at 2:45 p.m. every fortnight. And I'm on the drop at 9:40 a.m. Every fortnight on a Tuesday as well. So there's plenty to get your attention to sink your teeth into. If you want to check out our videos, feel free to jump on the ACE website. That's probably the where I put a lot of my efforts into trying to help people understand what's going on. Now, otherwise, I will see you all next week on Tuesday at 7 p.m. at the same time, Australian Eastern Standard Time. And I hope we'll see you all then. Have a great trading week. Good luck with your trades for the rest of this week. And go have some dinner and have a good break. Bye for now.